Hello, everyone. Welcome to our March 24th, 2023 edition of This Week in Crypto. I'm your host, Brian, and I'm here with our founder, Maxim. Maxim, how are you? Maxim?
Yes. Hey, everyone.
There you are. How's everything going? Good.
I think we have a few interesting topics to discuss today.
We do. It's certainly been a tumultuous week. It's kind of a tale of two cities a little bit, where if you've been in the Bitcoin camp or even the XRP camp, you're doing okay. Most other altcoins, though, not so much. We have quite a bit of red here looking at the past week with Bitcoin and Ethereum doing okay. XRP, as I mentioned, it was the big winner over the past week, up 15%. But then look at all of these downswings. We have Matic at minus 7%, Polkadot minus 5%, and then we got some big ones, Atom minus 13%, Toncoin minus 12%, Lido minus 12%, Immutable X minus 18%. So a lot of retracing going on. And this is kind of typical after you have the kind of run that you saw here in the first half of March, and even really going back to the beginning of 2023. The past 2 months in particular were very, very solid for altcoins. If I even switch this to 30 days, you can see just how many altcoins have started to retrace here, with just a few exceptions like TMG. But look how Bitcoin is actually up 15% in the past 30 days, while you have a lot of minus 10 to even minus 30% drops. Ethereum plus 7%. So yeah, there's a reason that there's a lot of BTC and even Ethereum maxis out there who preach that given enough time, even with all of those plus 20, plus 30% weeks of the random altcoins out there that bait you into going into smaller caps sometimes, the slow and steady trotting of the top caps can sometimes be the way to go. And at least over the past month, that's been the case. And looking at the past week in particular, we can see Bitcoin is starting to be discussed more, and there's a few reasons. Obviously, it zoomed past 25K about 2 weeks ago, and it's been kind of hovering in this 27 to 28.5K range here more recently. And so a lot of people are starting to discuss Bitcoin and the prospect of 30K. We even had kind of a little bit of a mini viral discussion about Bitcoin as a potential $1 million per coin asset one day. Obviously, that is not in the cards anytime soon, but people are looking ahead after becoming a little more optimistic here in 2023. And it could just be to rile people up, get a little FOMO going. But either way, when you see those discussions, it starts to pull the social volume away from altcoins and back into BTC. And I think that's kind of what happened, especially when you look at how, Ethereum, Tether, USD coin, like they're all kind of settling down again in terms of discussion rates. We do still see, Cardano, XRP, Litecoin, a few of these large cap assets are starting to gain some steam again, especially with some of them getting some price rises and sort of mini breakouts here. You can see Litecoin, for example, at plus 10%, Cardano plus 6%. So there's a reason that a few of these are in green, and that's because they've managed to stay above water over the past week while most other altcoins faltered. So yeah, it's definitely been kind of a mixed bag. The big news, of course, was Wednesday, I believe, the FOMC they made their decision to raise interest rates by 25 BPS. That was kind of a mild disappointment after the banking crisis from a couple weeks ago was bringing rumors that we would actually see Fed cuts, which was a very bullish sign. And when we heard that news, it wasn't surprising to see that crypto started to soar. And that's when we had Bitcoin zoom past 25K and even above 28K. And that's when people started to really shift the narrative and say, okay, crypto is no longer stuck in the mud here. Banking is collapsing. Crypto is finally doing what everyone was waiting for it to do, and it's the anti-banking system we were all saying it would be. And right when everyone got that FOMO, of course, Bitcoin put on the brakes, and we've kind of been in this ranging period ever since. Maxim, I'm curious, what other things do you think are kind of contributing to this price action right now?
Just looking for button. Let me start from a bit different angle. Can you open the chart? Gary shared it today in our discussion with stablecoin dolphins.
Stablecoin dolphins. I'm looking for it right now. Got it.
So here's where our story begins. Red line is USDC, yellow USDT. Okay, USDC, yeah, for very well-known reasons, decreased, and some people who arbitrage it, okay, they moved out of USDC to real dollars. Now, what is important on this chart, this is a constant accumulation of stable coins by mid-size hodlers, 10 to 100,000. This is a cohort we like to watch because we know their behavior from the past, which is the following. As long as in a growing market, they don't they're not starting rapidly decreasing the stable coins, means moving to something of more risky nature. Even it's a joke now, what is more risky nature? But moving to Bitcoin, Ethereum, especially altcoins. So as long as they don't do it, it means they don't see, they don't feel FOMO. Let's put it as simple as that. On this chart, you see the lack of FOMO, despite of growing prices. Despite of growing prices, we've been witnessing in the last weeks, and after the crash, a recovery and new high, there is still no FOMO. Combine it with a statement from now everyone follows him, or almost everyone, Jim Cramer. It's your last chance to exit Bitcoin at a good price. So the midterm, no FOMO, expectations of good time to exit, we keep stance, price can go higher. There is one but, not so good side in it. There've been, not right now, which again is a good sign, but before we had all talks of Bitcoin to 1 million, or this famous bet from Balaji. And or Bitcoin to 1 million or Bitcoin to 1,000. We've seen a lot of talks like this, and this is not an environment in which Bitcoin could grow to 100,000, or let's say even 100,000, not to say about million. So we have a limit. Market can grow, but it cannot make new all-time high as of now. This is my statement, yeah, or my understanding of the market situation. When the market can go to all-time high, go back to 19 or 21, it's completely different environment. You will be scared, which we are partially now, all of us, a little bit concerned about market situation in general. But still, there are expectations. A quite big part of the crowd, we can go to all-time high. We cannot at this environment. It should be different. So, to sum up, the lack of commitment to deploy capital shows that the market can grow. We should change. We should see changes in this market. Too high expectations means market cannot grow too high. Yeah. So my current, now it's no investment, but just how I planning to do it. I think we spent a lot of time at 1.8 for Ethereum several times, so probably we are ripe to break it and to go somewhere in a direction between 2,000 and 2,500 for Ethereum, and corresponding for Bitcoin between 30 and 35, whatever the rate is. And this is where very critical eye should be placed into how the crowd reacts. If the talks about, yeah, now we're on the way to 100,000, 1 million, that's it. You should sell most of your holdings. Yeah, if it's suddenly out of whatever reason, we keep piling up critical messages. SAC, I don't know, really goes in the court with Coinbase, and crowd takes it seriously. Not like right now, it's not really seriously. Or I don't know, some big player also go out of business. And yeah, if we have by going to high level some concerns, okay, we can keep growing. But if we are coming back to the stage where, okay, 100,000, 1 million, Balaji might win the bet, then you know that's it. And there are other smaller metrics which we can look. I will share with you when you're talking some chart layouts. They give a bit more interesting, detailed insight of how crowd behaves on altcoins. Quite interesting ones. But the blue chips picture is like we described. We are not blocked too much of going higher, but we are blocked a lot of going much higher at the moment.
Mm-hmm. Yeah, very interesting. I think this talk of dolphins relates well to the further discussion of sharks and whales that we can transition to here. We can see Tether over the past year. Obviously, it made a major accumulation beginning back here in August. So for about 7 months, we saw this huge rise. And maybe this is just a small blip. It's hard to say, but at least over the past 10 days, we've actually seen the sharks and whales for Tether finally show some signs of dropping. And, you know, we're still so far higher than we were back when it was 27.7% held versus 38% now. But, you know, if this line continues to drop and Bitcoin's sharks and whales right here in this green line continue to stay flat, then I start to get a little concerned, because I think this rally, Maxim, happened because of the fact that stable coins like Tether especially were rising so rapidly, even with Bitcoin's sharks and whales staying pretty flat here. And that's helped us kind of propel to the next level, alongside, of course, real news like the banking crisis and you know, the FOMC rumors that they were actually going to cut rates, which actually turned out to not be the case. But yeah, I think that stable coins, those dolphins, are very important to take a look at, as well as these sharks and whales. You can see that USDC, obviously, it went through its own crisis about 3 to 4 weeks ago, and that's when you started to see this huge plummet of sharks and whales holding it, going back to about, actually got all the way back to where it was in May of 2022 when prices were still plummeting. And now it's at least kind of flattened out. So USDC is kind of treading water, but still much lower. And I think Tether was the primary beneficiary of it. The USD still going down, and DAI is actually coming back up. But you know, Tether here and Bitcoin, these are the big things that I think are important for our community to watch. And right now they're showing a little bit of a chink in the armor right now that we want to be concerned about.
Yeah. There is. I mean, it's not situation is not extreme to any direction to give a very strong call, but the data reveals interesting enough pattern which we can discuss and share. Talking more about probability for midterm and long term. By the way, you know that this is because of Twitter changing of the algorithm, that now our social volume is not to be taken in absolute sense, more like tendencies.
Absolutely, yeah.
In absolute, yeah, okay. Mm-hmm.
I wanted to take a look and see if there was just some sort of tick up in the past week, but it looks like it's pretty much regular fluctuations right now. So what Maxim is referring to is about 2 weeks ago, we had a big update where we changed the way that we're tracking Twitter, and we removed a bunch of spam, got rid of a lot of things that are inflating the amount of social volume related to any topic. And you can see exactly when it happened here on March 14th. So about 10 days ago to be exact. I would start to measure your social volume queries, chat, by anything that's happened since March 14th. You don't want to go before, or else you're going to get, giant differences here. You can still look at things like Fed or FOMC because all the news broke after here on March 22nd. But I wouldn't compare it to back here because then you're going to have some inflated stats that, you're kind of comparing apples versus oranges instead
Can
of
use
oranges.
social dominance is good for this because it stays the same. It takes into account the total amount of social volume.
Mm-hmm.
So whenever you look for Fed of FOMC, if you select the social dominance, it will show you the right results.
It's a good point. Yeah, looking at the ratio of discussions related
you
to
see,
all other things.
this is exactly the point. The last time, absolute social volume is equal to the one before, but you see the dominance. It's like really was the most dominant topic.
Mm-hmm. Yeah, so we can see here, it was pretty obvious that the plummet happened in tandem with the discussion related to the FOMC deciding to raise interest rates by 25 BPS. Certainly not a major deal, right? Like back in 2022, we just kept seeing 75 BPS rises every single month for about, 8 or 9 months. And that was a big contributor to prices retracing the way it did. Others may argue that it was just a standard retracement as a result of being halfway to the halving, where you typically see one down year about during the second out of 4 years of the halving cycle. And now, at least based on the pattern, I can show you our good friend, the Rational Root, who's quickly become one of my favorite Twitter handles. He has illustrated how the halving has impacted prices over time. He has the arrows here pointing to when each halving occurs. You can see since the halving 3, which occurred in May 2020, 2 months after COVID, and it kind of surprised everyone that prices were going up when everyone thought that, Bitcoin was imploding because of the pandemic. You see this big rise, and then this is when the retrace happened, similar to 2018. So 2018, same as 2022. We should see something similar in 2014 right here. And then we should see something similar in 2012, which we sort of did. This was kind of so early in Bitcoin's life that there's a little more ranging, but you still see this clear dip that occurred in the beginning of 2012. So if 2022 was considered the normal down year, then we should be looking at what 2023 does compared to 2019, which was actually a pretty good year for Bitcoin. And 2015 was actually a pretty good year for Bitcoin. And 2011 was even a pretty good year for Bitcoin. Of course, Mt. Gox, I think, was part of the reason there was so much volatility back then also. But you get the idea. There are several reasons that prices go up and down in the long term. And with us at least being past the traditional retrace that happens every 4 years, there should start to be some anticipation, especially coming up in the summer, that the halving is starting to become near, and that should benefit prices for reasons beyond what we even show here through our on-chain and social analysis today. And speaking of social, while we're here on Bitcoin, you can take a look at how social volume and dominance has really changed for Bitcoin over time. I'll zoom out to the last 6 months. And we'll actually just take social volume off because of the change in our API. Taking a look at just dominance, take a look at this. This is real, folks. So Bitcoin is being discussed at a much higher frequency than it has been in quite a long time. And it was struggling just to stay above 12 to 15% for most of the past 6 months because everyone was kind of trying to chase those altcoins and find the latest ones that are decoupling and might go on a mini pump. It seems as though the altcoins beginning to retrace has impacted people's optimism, and it's returned a lot of the attention to Bitcoin as that relative safe haven where people can hold their coins now. And I think this is good for crypto overall. Traditionally, we have seen that Bitcoin's social dominance being high corresponds with most of the big price rises. I'll go back 2 years here. So this is an adjusted social dominance line showing when Bitcoin is being discussed more than the key average of 20% and less than the key average of 20%. So obviously a lot of people were talking about it just when Bitcoin was starting to bottom out in the mid portion of 2021. And then we see this big rise. And then finally, everyone starts to get greedy and they want to get into Doge and Cardano and all sorts of different assets. So Bitcoin's social dominance goes lower, price falls off a cliff. And it pretty much stays below for this long extended range between the all-time high in November all the way until June of 2022. We finally see a huge plummet in June, and everyone is talking about how Bitcoin is going to continue falling, maybe below 10K. Obviously, that didn't happen. Bitcoin's social dominance got super high again, and then prices bottomed out and began to rise. But very quickly, people jumped right back into altcoins. We see this big drop here. And then finally, we have plenty of contributors that allow prices to rise again, even without Bitcoin's social dominance being high then in January, but it certainly is high now. And I think this is a pretty good thing, Maxim, that we're now seeing a healthy amount of BTC discourse after altcoins have bled a bit.
It is. Just need to keep in mind that everything's changing, nothing stays forever. And from behavior point of view, it's always refreshing how the least expected topic gets traction and evolves. I bet a few months ago, no one really betted so much on Bitcoin. Now we think that we betted, but I tell you, no. It's like our mind thinks that, we know. No, majority didn't know. That's why it changes. Well, we didn't expect also events in the bank sector to be like that. Now it's obviously become accepted by majority of participants. You see it on just on this chart discussions, and it's not only price or market cap dominance; it's a social dominance related to Bitcoin. So now Jin out of the bottle has to completely evolve to the maturity of this topic, where Bitcoin is the asset without counterparty risk, and then start diverging. And this is another message from behavior analysts at Santiment. We will see divergences. If even the Bitcoin price will keep pushing, you will notice subtle changes in communications. Suddenly on this chart, this is very important now, social dominance of Bitcoin. You will see that, interesting. The dominance of talks about Bitcoin going lower. Where is it? And this is the question. What will be the next topic? We will see. And also, when I personally think it will be Ethereum for obvious reasons, but obvious reasons, not necessarily what market decides to take on, but some pure technical analysis says we are quite close to a break in Bitcoin dominance. There will be some spike, maybe moving to Ethereum, maybe some other altcoin, like L2s, or Arbitrum, Optimistic, big thing. And then it will come back. When the people say, okay, that's it with Bitcoin, we need to move altcoin, it will come back one more time. But for the time being, it's likely we're close, maybe already started, at least a few weeks, maybe 1 month. It will be not Bitcoin time. And then we'll come back one more last time, just to push it to extreme so that everyone knows, okay, Bitcoin is the asset to stay. just coming to this extreme, to the peak, to the total maturity never comes in one way. It's always up and down, and then again up. Now we've seen quite intensive convictions that Bitcoin is asset to CI, but it's not final, but still we need to correct a little bit. Money will move somewhere else, we'll see where.
Yeah, it's fascinating what goes on with kind of that rubber banding effect in crypto, where you see Bitcoin have its moment in the sun, and when it starts to break away and everyone gets into Bitcoin, suddenly the altcoins catch up and Bitcoin just stays flat. And then after the altcoins catch up and you see Dogecoin up 30% for the week, then suddenly they put on the brakes and Bitcoin goes up again. And sometimes they both go down together, as we saw throughout 2022. But I agree with you, Max. I think it's going to be kind of a game of tag between BTC and the rest of crypto. And it may go on for quite a while, but ultimately, I think there are some promising signs that 2023 will be a good year overall. Especially considering, before I go to that,
let's keep it open, yeah? I'm still concerned or see as a good chance we haven't seen the final bottom, yeah?
Yeah.
But, I prefer to happen it faster. Sooner than later, pain is gone and that's it. But yeah, we'll see. Let's continue.
Agreed. And I do think that this green line for BTC will be the key, maybe more than anything. 10 to 10,000 BTC holders always have a dramatic impact on where prices go. And it was looking for a while like they had finally put on the brakes on dumping BTC and it was moving up again. But now it's actually starting to slide a bit. So there is some concern, and the bears out there could have some prices moving in their favor for a little bit too. If this line in particular goes down, while stablecoins don't seem to go up, that would be a bad combination if you're a bull. All right, so besides that, why don't we take a look at some of the correlation going on between Bitcoin, the S&P, and gold, and I even have Ethereum in here as well. This is the past year. You'll notice the big break in the correlation happened right here. This was when the FTX collapse happened, which dramatically impacted crypto negatively while pushing up gold and the S&P for a while before they eventually latched on again. And I guess I can go back about 4 months or so, and you'll see a much smoother correlation. It started between Bitcoin and the S&P 500, but over time, especially after this banking crisis from about 2 weeks ago, that's when Bitcoin, Ethereum, and gold all kind of started to latch onto one another as alternate investments when people had poor faith in the dollar and banks and holding money in equities, because stocks can be drastically negatively impacted when you hear about banks potentially going under or confirmed to be going under, as Silicon Valley Bank was. So right now it still looks as though Bitcoin and Ethereum are moving in close proximity to what gold's price is doing. I would even look at silver's price as well. They're all kind of moving very closely together still, as people are hesitant to at least continue to trade Bitcoin and Ethereum the way they would a high leveraged tech stock was, as many people were arguing pretty much for the last year and a half. What crypto was kind of doing was kind of being a high leveraged NASDAQ stock. So I think ultimately this is kind of good for crypto, because the S&P is having trouble gaining any traction at the moment, while gold, I mean, look at gold just from March 8th to the 23rd here. Its price went up 10%. That's a huge run. And gold is,
it is obvious. We don't have data on the Sandbase, but there was after event 2 weeks ago with First American Banks, there was a very obvious fly to security. Gold is one part of it, and then 6 and 12 months of US Treasury bills. And now we see it, or at least I see it, when I look in TradingView, also even European government bonds, the yield is pressed across the board, which means the buying pressure is immense. It's really to move the yield or the price of bonds, governments, this should be very massive buying pressure, and it's obvious. And now after merging EPS and Credit Suisse, when they punished the slower grade bondholders, which was not supposed to happen. So I can imagine from all banking bonds of this 81, everyone's leaving it too. So, and where do you stay? Gold, government bonds. And if you are really smart, you will move part of it to crypto because this the asset with zero counterparty risk is the only one. Okay, you can assume government bonds also zero counterparty risk unless government fails. But the only three actually assets indeed. Look, gold. You buy physical gold, you put it. There is no counterparty risk. You buy Bitcoin, Ethereum, you control keys, no counterparty risk. Or you buy government bonds. That's it. And it shows us, or the price action reveals very clearly there is a trust crisis. Yeah? And I don't think there is a way. Well, the regulators try to keep it that there is no widespread trust crisis. But can you imagine if banks stop trusting each other? Wow, that will be
not good. Yeah,
it's like your payment stuck for weeks. I don't know. We've been there in 2007, so they learned the lesson in this sense. That's why all this huge liquidity and balance sheet of Fed is increased by 300 billions. People think it's bad. It's not bad. It will be much worse if they did not do it. If only slight signals, payments are not going through, that's it. It will collapse in 1 week. Everything it will stop working, and they know it perfectly well. So it's a list of evil what Powell is doing. Actually, he's not so bad. Anyway, mistakes were done before him. So he has to deal with it. Yeah. Okay. So this chart reveals here flight to security, which means no counterparty risk. Government bonds, gold, crypto. That's it.
Absolutely. Yeah, I think it's going to be interesting going into April whether this trend continues. I think that stocks got hit by this slight rise from the Fed, but I don't know if the stock market can be held down for too long. I think that people might be overreacting to the issues that are going on, at least with the interest rate hikes. I think the banking issues can absolutely go on for a long period of time, probably not to the extent we saw in 2007 with Lehman Brothers and all sorts of stuff like that really impacting the markets for like the next 5 years. But 1 to 2 year kind of stagnancy, it wouldn't be shocking to me. But there are tons of opinions about the stock markets, a lot more opinions than there are about crypto markets. So we're going to continue to look at the news that's all over the internet to see what might be coming up next for the S&P and how it relates to crypto. Now, in terms of some of the main Bitcoin metrics here, and I see Balaresh about the link. If you wouldn't mind just informing the Discord and Telegram crowd about where they can go if they're not able to get on, that would be highly appreciated. So in terms of what's going on with Bitcoin right now, looking at the on-chain metrics, looking under the hood here, what do we see? So we saw this big rise in trading volume here from about 10 days ago, but that quickly dried up. And normally for a rally to continue, we need to see trading volume rising as prices are rising. And that didn't happen. We saw an initial rise, and then this is a pretty clear bearish divergence on the volume end, especially for you TA traders who are familiar with analyzing the markets this way. You want to see prices and volume going up together like this, preferably volume even going up more than the price. So it wouldn't be surprised to see a bit of a drop off here, but I still think volume is significantly higher than it was back in November, December.
Actually, Brian, the good that you bring is this is one of sign which it doesn't look good.
Yeah,
This doesn't, and There is some non-zero risk we can just correct from the current levels. Yeah. This divergence going for too long time, we might see zigzag moves. Yeah, true. And I think the same for Ethereum if you switch the asset.
Yeah, let's check Ethereum really quick and see what's happening there. Yeah, somewhat similar. Not quite the drop off.
Not as bad, yeah, not as bad. But if we don't break today on a Monday, this pattern, I'm afraid Tuesday, Wednesday will be bloody in terms of at least 10% drop down. Yeah, possible.
Bold predictions, yeah, but I can't say I refute that because trading volume doesn't seem to be sustaining the way prices have soared here. So we can also look at how the circulation has been looking for both Bitcoin and Ethereum, and it is looking a bit better. We do see that we've finally gotten out of this trend of bearish divergences with the amount of unique BTC moving compared to its current market cap. We're at least back in semi-bearish range. We're at an orange bar instead of a red bar for the first time in a long time. It doesn't quite necessarily indicate, a breakout is occurring at all. We'd maybe want to see a yellow or a yellow-green bar like this, indicating there's a big pickup in token circulation. But we can at least see that, the huge all-time high bars that we were seeing these last 3 months, where prices were rising, but circulation wasn't saying that it could be sustained, that's starting to fall again in a good way and showing that at least it's starting to pick up. And I would be pretty sure that March will end in an orange range like this. And then looking at Ethereum to see if it's any different, it is actually not looking as good. Ethereum is in its fourth straight month of a bearish divergence right now. And with that said, I wouldn't be surprised if Ethereum continues to lag behind Bitcoin. I think BTC versus Ethereum right now, it's just been a huge rise for Bitcoin compared to ETH. And even more.
Everything against Bitcoin.
Exactly.
Well,
Bitcoin
except Ripple, but it's another story.
Yeah, at least temporarily, Ripple has gained some steam. But even BTC versus Ripple over the past 6 months, it's still BTC dominating. But yeah, so Ethereum not looking quite as good as Bitcoin. Bitcoin isn't exactly looking amazing itself, but at least it's improving. Looking at Ethereum's sharks and whales here, holding anywhere between 100 to 1 million Ethereum, very wide range, continuing to slide. It's been on this drop for quite a while now, down to 63.8%. Back when it was at 73.7%, the price was sitting, or the price versus Bitcoin was at 0.068. It's now down to 0.064. So pretty modest drop, but it's concerning nonetheless. Yeah, 13.3% drop of Ethereum versus Bitcoin. Now, exchange funding rates I wanted to get into as well. It's looking pretty neutral. Again, you have a few exceptions like OMG, Tron, and Binance Coin that are still being shorted. I see Monero here as well, but everything else is pretty much neutral. Things have kind of come back to earth. The shorting that was going on throughout January and February, people have kind of given up on it for now, and it almost seems like the crowd is expecting for there to be a bit of a retrace or at least kind of a stagnant flattening out period. And if they start to get greedy, if you start to see people longing once again, that would be a sign to take some profit and be a little careful, because that means that the crowd is starting to get that FOMO itch. And when they get that itch, we see price drops more often than not. Going back to Bitcoin's
and also as we're on the topic, what will be a very clean sign to leave the market? Well, as always, we're talking about probability.
And that's a good question.
So far we've seen On one side, yeah, we stick to break above 1.8 in Ethereum because of some reasons, but there are enough reasons to be not so optimistic as well. Now, what will be actually quite a red flag? One of them, what you say, Brian, we see longing, and the best if across some assets. That's obviously in the current environment means, okay, FOMO kicked in and market will punish them. Another one, if it's a small holders, you can take, well, in Bitcoin is between 0.1 and 1. And in other assets, we can visit some charts. I don't know. I'm personally observing Maker and ENS. If also IFI, if the small holders comes out of hibernation and start piling up, also need to leave. This is probably one of the best patterns when you say, okay, now when the small people are coming into it, or small holders massively, so it's time to leave. We don't see it yet. Despite, actually, I was surprised. I saw someone referencing one of the charts from maybe it was Glassnode, saying that retail accumulated so much, and it did not. But anyway, I think you prepared already. Yeah? I mean, it accumulated a little bit, but it's nothing special.
Yeah, it looks like the yellow and blue lines here, 0.1 and 1 to 0.01 to 0.1. They're climbing at a pretty normal rate. It's nothing crazy. So if like we saw the yellow and blue lines doing what the very tiniest addresses are doing, 0 to 0.001, that would be a concern that it's time to get out. So if you see this parabolic slant all of a sudden, be careful.
Yeah, if you see this slope on group which is on the left side, 0.1 to 1, this is the time you should consider seriously to leave. But we don't see it yet. Yeah. So it's one of the reasons we kind of stick, if even it's difficult. I feel not easy to keep long, but it's well, if you don't keep long, what do you do? Well, you can go to stables, but they're risky too now. Anyway.
Yeah. But yeah, I see a good example here. Throughout, like right around the all-time high in November 2021, look at how the blue and yellow lines really just took off all the way until December. And then all of a sudden they started to give up in December. And what do you know? That's exactly when the prices started rising.
Exactly. On this long term, you see that whenever I read that, small holders, now there's the one who participated in this rally from December. Say, no, bullshit, they're not. Actually, it was the reason why we had rally, because they've been buying what was supposed to be dip. It's very typical behavior. And then they stopped doing it and the market took off. And on this long-term chart, you can see it very nicely indeed.
Yeah. Yeah, that's definitely a very solid indicator, Max. Thanks for pointing that out. The mean dollar invested age is interesting too right now, Maxim. I see that very recently we have a little bit of flattening going on, and it's been a long time since we've seen this. You know, it's certainly far from a big drop or anything, but considering the mean dollar invested age for most of the last 2 years, I think it's just been going up and up
since November 21. I mean, even before, it was actually an early sign. I still remember, in one conference somewhere, I don't remember where, I was presenting and explaining mean dollar invested age, how it's, if you want to pick up one indicator, this is the one. You want to understand cycles of accumulation of distribution. And then I pull out the chart. I think it was September, October 21. And I look at it, and people say, and how does it look? I say, it doesn't look good. So it was the first time I say, oh, it's really now doesn't look good anymore. People have been accumulating ever since the top and didn't change the pattern. And you know what happened? Yeah, the accumulation phase continues. It means price keep just crashing down until the next redistribution cycle. Again, it's good you pull up long-term. On this long-term scale, what we see now, it's almost invisible. But it gives us a hope it might change. If it continues or even start going down, it means there've been enough accumulation or even long-term hodlers who consider it's enough. I feel worried. I need to give. I don't know. I need to do something else. And it's always a good sign to kick off or to continue growth. As long as we have enough people who are concerned or willing to leave the market, there will always be enough people to buy. But it means we have fuel. Yeah. If we are in a position when everyone convinced or like 90% convinced there is no reason to move your coins, now you are into something which will increase 10 times in value, which you see an increase in yellow line, then that's it. You don't want to lose that.
Exactly. And I
So
see
maybe.
that in most of these cases where the slant started going down, it's never just like an immediate like up and then boom, it falls. It's very gradual.
You have
where
time.
You'll see
You have time.
these flattening for a couple of months, and we're maybe 2 weeks into some flattening right now. If you start to see this flattening turn into a down slant, very good sign that we may be entering a full-on bull run. So this is maybe our most important long-term metric on Santiment, and I definitely recommend bookmarking this one, not just for Bitcoin, but it's useful for any asset out there. I've seen it work for Tether, where the mean dollar invested age suddenly goes down and you see a bunch of dollars moving. Yeah.
Okay, I never look into that. Okay, I need to check it myself.
Yeah. So besides mean dollar invested age, let me zoom back into the last 6 months. It looks like the network realized profit losses. Yeah, there had been quite a bit of profiting over the past 2 weeks or so here, with a lot of these mini spikes. None of them are like huge. You know, they're not even as big as these negative ones that happened back in November when we were bottoming.
If you remove this big drop, then it will look quite healthy. It's a second. It's a second indicator, data indicator, why we, despite of concerns, still keep longs. You see quite healthy behavior here. People taking profits or coins which are in profit being moved. As long as it happens, it's good. Yeah, it's good. You will see, for instance, in 21st of February, when it stopped. Yeah, like 21st of February. Yeah, if you highlight, I mean, you move your cursor.
21st, right here.
Yeah, exactly. It was like there was a short time this and a few days before. Suddenly, no one was moving coins and profits anymore. It's again the sign. Why should I? Sign of feeling. Why should I? They're thinking no need. We will go higher, and then it just turns around. Now there is enough feeling. Yeah, I need to do something with Bitcoin. Who knows? Maybe this is the top before the drop. Whatever they feel or whatever they think doesn't matter. They feel something. They move their coins, and you see it on the chart. And retail, as we showed before, is not piling up. So you see it on the chart. You're saying, okay, I don't feel confident because I don't. But this data tells me stick to it. I say, okay, I stick to it. Because if I don't, how can I make decisions? The only this volume divergence is quite concerning. Yeah, but it's good that you pulled it up. It's actually the piece of data we look every day, sometimes every second, and depends on the market phase, but I look at it very often.
Yeah, and you can always kind of zoom out, look at just 1 day or even 7-day spikes, and you can see, you know, we've been in a spot pretty much for the past 2.5 weeks where the realized profits have gotten pretty high. When you see a lot of these low weeks, these are the bottom signals. These are the ones where you see tons of realized losses piling up, and it's a good signal that you can start to put in more fiat or stable coins into traditional crypto assets and be doing so at a much lower risk than usual. And on the topic of taking profits versus taking losses, we also have this template here where we can look at both Bitcoin and Ethereum at the same time. I think this is one of our better metrics that probably deserves a little more love, but you can see that other than this week here at the beginning of March, it's been mostly a high ratio of profit taking versus loss taking. Let me zoom out to the last year here, give you a wider angle. And you can see when a lot of the losses were being taken here in November and mid-December, and then blast off. We see tons of profit taking, the price eventually flattens out as predicted, a little more profit taking, and then the big drop where everyone starts to panic and sell at a loss in the first week of March. And then right as everyone's panicking, we suddenly are seeing a lot of profit taking again, which points more toward this price action, something like that happening or that happening over the next week or two, unless we start to see a lot of people start to even out this ratio for Bitcoin and Ethereum. But right now we're on our third week here of very high profit taking compared to loss taking. And that's usually not a great sign for prices to continue going up. Bitcoin especially, this was its second highest week in the past year, only being eclipsed by the one in mid-January. So that's very concerning for some top warnings there. Ethereum a little more mundane compared to a lot of its huge profit taking, probably because Ethereum hasn't gone up as much as Bitcoin. But regardless, I'd be a little cautious when you see this kind of signal happening. All right. MVRV, taking a look at this really quick, we see that most assets on the altcoin side are actually showing still semi-overbought or overbought. And this might be a little surprising considering a lot of altcoins have fallen over the past month. But because of the huge surges that many saw in January and February, it appears that there's still a little bit of overvaluation going on, and buying into altcoins doesn't appear to be justified by this model just yet, based on the massive gains that a lot of traders had after the markets really started to take off in early January. So beware of that, and also take a look at our top transactions model. Today, we see that the biggest transaction amongst the top 100, 150 assets out there belongs to FraxShare with a $29 million transaction. If I scroll over to Frax, it appears that it was a non-exchange address moving to another non-exchange address, as indicated by this yellow box. A red box means it's a non-exchange address moving to exchanges. A green box means it's exchanges moving to a non-exchange address. So green would be the best, red would be the worst for the price, and yellow and orange tend to be pretty neutral. Besides Frax, we see that Mines of Delarnia went up with a $24 million transaction. Wi-Fi had a $5 million transaction. Compound 13.
Going where? Wi-Fi? Because
for Wi-Fi, let's check
yes.
it out. Wi-Fi was an non-exchange moving to an exchange.
Okay. Okay.
Yeah.
Okay. Good.
So beware if you're in Wi-Fi
Yes.
right now.
Yes. Okay.
Not a huge transaction, but 5 million is still up there. You know, it means this is one of its 10 largest transactions in the past 3 months. So
yeah, for Wi-Fi, it's quite big.
Yeah. I also reported yesterday. Yesterday was a huge day for altcoin moves. We had a lot of big ones, especially Fetch, which I just pointed out was actually exchanges moving to a non-exchange. So that's good for FET. I also want to check out this Matic one really quick, and DIA and Mana as well, if I have time. So Matic was a good move. Matic had a lot of funds moving off of exchanges and into self-custody. So keep that in mind for Matic. Decentraland, same thing, moving off of exchanges. And what was that last one, Dia? That was a neutral one with non-exchange assets moving to another non-exchange assets. But these were very big assets, big asset moves compared to what we're seeing today, especially two $40 million plus transactions for some mid caps like that. I think that's pretty significant.
Looks like Burj Khalifa.
What was that?
You know, in Dubai, this high building, Burj Khalifa, or how they call it.
I've never heard of it.
Yeah, well, they have two very high buildings. One of them, Burj Khalifa.
Oh.
Yeah.
So keep in mind that Fetch and Matic are very active at the moment, in a good way, it seems, though, with money being moved off exchanges. I also wanted to point out that the Bitcoin and wrapped Bitcoin whale transactions are still very high. Bitcoin is here in red, and you can see this trend line showing that on average, there's about 8,600 whale transactions valued at $100,000 or more when looking at the past 30 days. Wrapped Bitcoin, about 645, which is very high for their network. So when these two assets are seeing lots of activity, especially with the BTC line going down, it likely means that there's a little bit of profit taking going on. So another caution flag here. You know, we could be faked out, and there could be an attempt at 30K or even beyond, but at least based on probabilities, it looks like there's a little more caution signal going up than there has been in a while. All right, with that said, I think it's a good time for us to get into a few questions here for our last 10 to 15 minutes. Balrash, if you see a couple, we'd love to dive into a few.
Yeah, we got one asset request we can look into. That is Mask.
Mm-hmm. Yeah,
And
Mask
then we
has
have
been on a
couple
big
of ones
run.
that are rather new, so we don't have a lot of data yet, including
Do you know,
Avatar.
Max, the Mask project? What is it about? Okay.
Yeah, I've seen Mask being discussed a lot because of its huge surge. Obviously, just in the past 2 weeks, going back to the 10th, price is up. God, it's doubled 108%. So this is one of the big stories over the past week, is just this huge monumental rise by Mask. I had actually been seeing, I'm gonna check really quick. I think it was under the top transaction. Yeah, there were two big ones at the beginning of the week, 11 million and a 24 million one. So there are a lot of big transactions going on the network that foreshadowed this rise. As far as volume goes, yeah, we're actually seeing a bit of a rise in volume going into this. So that's a good thing. I mean, take it with a grain of salt, because oftentimes like a big isolated volume spike like this could mean a top is occurring. On-chain and transaction volume, yeah, they're definitely up right now. Transaction volume in USD especially is very high. Just over, oh, it appears that we're a week behind. That's strange. Let me zoom in here. Okay, that makes a little more sense. Yeah, so volume still high. Transaction volume USD has come down a little. So we've kind of got this high. I think this was the all-time high here, if I'm not mistaken. Back to the last year. No, I take it back. It actually had gotten higher way back in April of last year. Regardless,
but more or less. But
yeah,
it's attempting to break all-time high. One thing, can you check if we've seen active enough coinage consumed, which would reveal people taking profits, moving coins in old enough. Oh, look at this dollar destination. This is what we've been talking about.
Let me add age consumed to it also.
Yeah. This is a kind of good sign. Okay.
So this is a big drop in the mean dollar invested age line, indicating that there are a lot of coins that were in dormant addresses that are starting to be moved around.
So old-time hodlers they're given torch to the new ones. If the project has a good story behind or narrative, doesn't need to be AI. There are many other narratives. That might be a good picture we're witnessing here. Yeah, age consumed. However, can you change the time frame to 1 month?
Let's take a look at just the past month.
Yes. So what I want to see here, and if we don't see big age consumed to the next, let's say till next Wednesday, then it's not good. Then again, everyone got relaxed and don't want to do anything. No profit taken, or not positioning to do profit taken, would mean they get overconfident. But other than that, it looks. And network growth, how does it look? Maybe it takes 3 months. I just want to see how much of new blood is coming into. And you see, our analysis actually doesn't need to be super complicated. Just need to reveal, we're trying to reveal a picture. Is new blood coming? Are old holders giving the torch to the new ones? Who is buying big or small ones? How much is a conversation in the crypto space about? And then you can build a picture, how much potential is there. Oh, well, this was a big growth. Okay. Mm-hmm. Yeah, well, it's the same till Wednesday. You need to see if the small increase we've seen a few days ago, if it keeps growing. If it stays like that, then you would make a rather case for, okay, we've seen the temporary top. Big spike, what was it, 17th of March? And then a new price, an attempt to push higher, but less new blood. It means less attention. And if it will be like this, less new addresses and altcoins stop moving, then it's temporarily break. But need to wait till Wednesday. Mm-hmm. For now, it's rather neutral with, let's say, 60% positive. Yeah. But and also keep in mind that everything depends on the total market situation. If now Bitcoin, for whatever reason, decides go down, for instance, to play this long-term divergence we've been witnessing, well, everything will go down. Mm-hmm. At least to some degree. Yeah. And if Bitcoin still a little bit pushing up and down, it can grow. It doesn't look, mostly because of mean dollar incitations. It looks good. It looks good.
And for the short term, especially for you TA traders out there, notice that this double spike did go about, let me zoom in here. It's very close. Yeah, it was a lower high. So we look at the 18th, it got up to 674. And then on the 23rd yesterday, it got up to 642 when it was attempting to rebound back to it. Typically, when you see a lower high, it reduces the probability of a continued uptrend, and it's more likely to have a downtrend. So, you know, I think it could very well range in this area based on the data we've looked at so far. But getting past this higher high of 670 something, that might be far-fetched right now. Supply and exchanges, let me zoom out again. Yeah, it looks like a lot of supply is actually moving off, which is actually quite rare, Maxim. When you see prices surging like this, you normally see a lot of money from self-custody moving back to exchanges.
Possible. As we are updating our labeling framework, and there are some new exchanges which have been growing. I learned about them. Could be we don't cover all exchanges. Depends where mask is traded. If it's only major exchanges, all good, we cover them. But there are some relatively new, and we didn't cover them before we start move to new labeling framework. Could be here. I wouldn't take it as an indicator at the moment. Maybe in 2-3 weeks when we finished migrating, we can use it. Now it's keep it more, be cautious, or need to double check where exactly it's traded on exchanges. Maybe we just don't track all exchanges it's going to.
Gotcha.
Mm-hmm.
Okay, so that could be some muddy data there that isn't really mm-hmm. worth analyzing at the moment. But mm-hmm. what we definitely can look at is social dominance, which it doesn't look like there were any huge spikes. You know, a little bit of an uptick right here back on the 18th, but social dominance is up maybe very slightly, but no mainstream attention of significance, which would actually point to prices maybe having a little bit of a rally left until the mainstream really starts to jump in and FOMOs into it. You also see, I mean, this is natural weighted sentiment being very high. It probably had a lot to do with the social volume spike, but yeah, there's some high degrees of positivity right now that would indicate that we might be in a toppy area. As far as development activity, it does look like it's getting worked on. It's getting about 13 notable GitHub submissions per day right now, which is certainly not nothing. if we go back historically to the last year, yeah, it's in a pretty normal fluctuating range, nothing too special, and it doesn't appear as though it's any sort of rug pull asset according to its active coding community. And I wanted to look at whales last but not least, see if there's anything there. So Mask is currently priced at about $6. So we can look at the number of 10K to 100K, 100K to 1 million. I'm just going to combine these all together. Interesting. So the key shark and whale addresses have actually fallen pretty substantially. It was at 171 on March 3rd, and it's fallen to 147. That's concerning, but let's take a look at how that compares to the balance of addresses here. 10K to 10 million. Also has fallen off. Whoops. That back up. So look at this, Max. There was a huge drop off. They were holding about 61.5% about 16 days ago, and it's fallen all the way to 40.5%. This is fascinating. This is one of the bigger drops I've seen. Certainly a bearish sign, in my opinion. I think that about a little over a third of the holdings being dropped by the key sharks and whales is a clear sign that there's some profit taking, and I'd be a little concerned with this.
Yeah.
I mean, that's a big drop. Looking at like the last year here, and we really haven't seen any drop of this size before. It's a fairly, yeah, it came into existence in February, and this is the biggest drop we've seen as prices have skyrocketed. So be a little wary by this indicator here and a few other of the indicators that we've seen. I do still like that there's dormant coins moving, but considering a third of the supply or a third of the coins held by these sharks and whales have been dropped, there could be a bit of a retrace coming up for Mask. So yeah, I think that was a great asset suggestion. Maybe we could do one more really quick if there is another suggestion, Max, Balresh, that is.
I think everything else that was suggested was really new, like days. So not for now.
How do you spell it?
Oh no, I said that there were two other suggestions, but both of the coins were new from the last couple of days, so there's not a lot of data on them yet.
All good then. Yeah, I think this is a pretty good.
Singularity.net, AGIX.
Yeah, that's certainly had a.
Oh, but I think.
And it's the same. Yeah, Max, finish your sentence.
Maybe it moved away from Ethereum. Isn't there something? Isn't it on Cardano now?
Oh, really? I missed this news. My goodness, why did you do that? Why do you do that? To Cardano. I couldn't understand.
And why is Mr. Berg not here? He would know.
Exactly.
Yeah.
Where is our...
Well, it definitely is obvious that volume exploded and on-chain transaction volume as well.
Yeah, so market makers are in action. Yeah. One thing about especially Arbitrum, we can show if you Max know or can lead us. I know that Ante was adding intensively metrics, and those on the call, some of people who will listen later can find what do we have on Arbitrum. I myself have access, so I'm using our internal Grafana dashboard, but we cannot, or we can give access, but no one will see it anyway.
You can already find it on Sunbase if you search on the chart page in the top left and you use that selector. Yes, I think if you search for Arbitrum there, it should show.
No, you say, yeah, you see the text.
Got it.
Not here, it's metrics.
Got it. Perfect. Arbitrum, what do we see here? It looks like it's very
Last
new.
week. Yeah, it just dropped yesterday. So you need to take 1 week, and I think the thing we can use trading volume maybe daily active addresses intraday. Intraday, yeah, this might work. Yeah, or even 1 hour. Yeah, this thing so. And then just maybe remove this big spike and drop on the left, so we can see some trend. Yeah, exactly. Yeah. Good, and we can even use UC active addresses 1 hour to reveal a little bit more activity. No, I mean the metric itself. Active addresses 1 hour. Yeah, I think they calculated separately, or is it the same? No. So yeah, initial activity was huge, and since then, actually stay. Those who wanted to dump, looks like dumped. Yeah, need to wait to start building some patterns. 1 week, after 1 week, there will be some information where you can play more safely. At the moment, it's so pure speculation. You don't even need any data if you want to trade now. You just need to read some messages. But for those who will be doing anything in 1 week, yeah, we have now all typical assets: network growth, active addresses, wallets distributions, whales, frogs, shrimps. Everything is there now. And you can start playing around and try to find your alpha. But just 2 days is a bit too early, indeed. Yeah, I agree, Max. 1 day is too little.
Yeah, I think once we have maybe 2 weeks of data, this will start to show some
2 weeks is
some meaningful fluctuations. Yeah.
Mm-hmm. Otherwise, it's obvious.
Volume.
Actually, you don't need to look into the data. I'm pretty sure will be small holders, especially those who did multi-account,
right?
Not arbitrage, airdrop hunting. They will dump bigger spot. Bigger accounts will accumulate. They keep accumulating because the game is clear. It's, there is a potential to go up. Just a question: what is your buying average? Those who got airdrop, basically their buying average is very low. They can sell at any price. The floor currently is liquidity pools. I think it's around $1 or 90 something cent. So it's a kind of floor, but it can be removed if market goes down. It can happen anytime. So not much data to observe. But in 1 week or in 2 weeks, yeah, there will be more.
Yeah, we'll be monitoring this, and you guys can expect some posts about Arbitrum coming up soon. So very exciting that we've brought this over to Santiment.
Mm-hmm. Yeah. And you can ask, by the way, Ante internally in dashboards and graph analysis remote.
Yeah, I know he's working on some good dashboards right now. They aren't quite ready, otherwise I would have shown them today. But it looks like he's getting them close. So yeah, I think with all that said, guys, we're in an interesting spot. It does look like this is one of the more bearish signal weeks we've seen in a while. So be a little cautious right now. Obviously, no investment advice, and feel free to trade whatever you feel comfortable with. You know, there are some assets out there that could still pump over the next week, even if there is a retrace as our metrics are predicting. Or there could be some breaking news that just changes everything, and more banks implode and the dollar goes down and crypto benefits from that. You never know what'll happen, but at least based on probabilities, there are some yellow flags out there to keep in mind. So, you know, certainly be safe. It's been a good start to 2023, and we don't want to see everyone's profits go right back down. So, yeah, I think on behalf of Maxim and Balresh here, I want to wish everyone a great weekend. Stay warm and safe, and looking forward to talking next week, Max.
Yep, same here. Thanks, Brian, for leading.
Thank you, as always.
Talk to you next week. Yeah.
Take care, guys.
Bye.